You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. Old trading walks into a bar. New trading raises it. That's tastytrade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named tastytrade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. tastytrade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means we are back. It is Wednesday. Time to explore what's going on in the wild world of futures. Yes, it is time once again for the Futures Rundown. My name, of course, Mark Longo from the Options Insider Radio Network, your home now for your favorite options podcasts. For 19 plus years. For futures, you're going back a couple of years. Futures options, we're going back a while, probably close to a decade there. So a lot of different futures-oriented content, but on the network for a bit. Of course, if you want even more, head on over to the pro, theoptionsinsider.com/pro. We delve into a wide variety of markets over there as well. And let's see who's joining us on the old Futures Rundown hot seat this week. I am pleased to welcome back our old buddy, none other than Dan the Man Gramza from Gramza Capital Management. Mr. Dan, welcome back to the Futures Rundown, sir.
Well, thank you very much, Mark. It's great to be with you as always, and I'm looking forward to exploring these markets today with you and those watching or listening.
I have to admit, I always get excited when the producer's telling me I'm getting a shot of Dan on the network that day, because I know it's always going to be a fun time. We'll have some laughs. We'll go deep into some products, and who knows, maybe we'll get a big adios. So a good time will be had by all, Dan, as we bravely enter the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, time to dive on into the trading pit, and a lot of things lighting it up to the upside and to the downside, lighting up our screens green and red this week. But before I break down the top and bottom five, Mr. Dan, sir, it's been a little bit since we've chatted with you. I think it's been since pretty much right at the beginning of the year, January 7th. So it's been a wild time even since then on this show. Obviously, the metals run has been nothing short of just insane. We could do several hours, and we have just on that. Of course, a lot of other products living a lot of lives just in the first couple of months of the year so far, Dan. What's been catching your eye since last we chatted on this show, sir?
Well, I think I would start with the equity side. It's really been interesting. I'm bullish on the equity. But what's interesting about it is if you look at it from a longer term point of view, like the S&P, we're range bound. We've been in a sideways market now for quite a while, at least since the beginning of the year, and I don't see that changing anytime soon. So there's some big challenges when it comes to this market moving higher, things that we want to take into consideration. I think the currencies, well, the dollar has a mixture of behavior with regard to the currencies. For example, the dollar's weaker against some of the European currencies, but it's stronger against Mr. Yen. You look at the Aussie dollar or British pound, Canadian dollar, it's firming up. I think about Bitcoin. Bitcoin wants to go higher. Today, we're seeing some indication of it, but the key is going to be the follow through. So that remains to be seen. I think in the interest rate markets right now, I'm looking for sideways movements in those markets. And Mark, you're right about the metals, but I'm looking for a sideways move right now, bullish bias in gold, silver, and copper for those markets. They want to go higher as well, but the pieces just don't seem to be coming together for those markets. Energy, it still has a bullish bias, but here's the deal we want to keep in mind. Energy is higher. It's not a supply demand situation. So you got to be careful there on the long side. Nat gas sideways move. We have a lot of nat gas as the bottom line. I feel the same way about the ags. Beans are trying to move up a bit. There's some optimism with some changes in the tariffs that may be driving that. We're seeing it in corn, wheat. Globally, we got a lot of wheat, even though the bias is for a move higher. So I guess that's kind of my overview of what's been happening in these markets since you and I have been together.
Let's see what's happening this week, shall we, listener? Let's go to the upside first. Let's keep things optimistic and positive. Unless you're a hardcore short, then maybe cover your ears. Number 5 on our list to the upside this week. Not a product we talk about that often here on the network, listeners. This is ethanol. Ethanol up nearly 5%, about 4.8%, taking the number 5 spot on our countdown this week. Number 4. We've got our old pal Ether. Ether actually catching a bid this week, up 6.8%. That will come as welcome news to a lot of the holders out there. Now it needs to go a lot more in the other direction. We're pretty much back right around the lows of last year. So 7% roughly in a week. It's not bad, but it needs a lot more if you're going to make some of these holders whole. Number 3 to the upside this week, we're going to the metals. It's platinum. Platinum up 10.4% on the week. Number 2, we're going out to silver. Silver, a rare number 2 spot. It's been kicked from the top spot. What could kick silver from the top spot this week? I guess we got to wait to find out. Listeners, number 2 this week, silver up 17.25%. So the silver bulls back in force, at least for this week. And then the big dog to the upside this week, up exactly 20%. We don't see that too often. It's one of the EMs. Take a quick guess. Which one is it, listeners? Yup, it's lithium. We've been talking about lithium for a while now here on the show. It's having a wild start to the year. And again, 20% in the week for any commodity. It's going to be a big move. And lithium topping the list this week. Mr. Dan, anything catching your eye in the world of ethanol, ether? Say those both 5 times fast together. Platinum, silver, or your beloved lithium, sir?
Well, what's interesting when it comes to lithium, which is a part of those market elements that we need for batteries, and it's a major component of that. What's interesting about lithium is we have a lot of supply. Remember, rare earth elements are not rare. It's just getting them out and processing. That's the tricky part. And we are seeing an abundance of identification of a lithium potential supplies around the globe, from South America, Australia, United States, a variety of places. But here's the thing to keep in mind. When we think about all these elements, including lithium, it's one thing to get it, and it can be messy. Getting some of the rare earths, the one of the problems is you have some things that are left over that can be nasty. So that's one issue if you're going to dig it up. The other issue is processing. And right now, the vast majority, I think it's over 90% of processing is China. So it's also a weak spot, not just for United States, but globally. It has an impact because of that. So I think lithium is a very interesting element. It's also a marketplace that's not hugely liquid. So when you see these percentage changes, that's something that you and I want to keep in mind. When you have a market like that, you can get that volatility swing fairly easily because of the liquidity issue. So your bid-ask spreads, your ability for those markets to move can be fairly high. So we have an element that's critical going forward, data centers. So there's a huge amount of demand for lithium. And if you're going to use EV cars, for example, and that's one of the weak spots I think you and I should be sensitive to, goes back to processing. If China says, hey, you know something, we're going to keep our lithium processing here for our stuff, and they're building a lot of electronic vehicles. So the electric vehicles. So they could say that. And the world at that point would really be squeezed. And if you ever hear that, or you want to see indications, is there something changing? Watch the prices on the lithium chart. I think that may be an indicator of change in attitude about that marketplace.
Yeah, that's something we definitely point out on the show quite a bit. Products like lithium, not exactly the most liquid, Dan. So sometimes read into these big moves with a bit of a grain of salt as we go to the dark side. Another product that has been having a rough go pretty much every week. Seems like it's a rough week for rough rice, and that is the case again this week. Off 3% for our number 5 spot to the downside. Number 4 going out to the realm of lumber. Lumber off about 4.4% this week. I've said it many times on this show. Lumber clearly moves. It's a question why it doesn't do more options volume. We've debated this many times. I won't go into it again, but lumber moving again this week. Number 4 off about 4.4%. Outpacing it ever so slightly to the downside for number 3. It's dry whey. Seems like there's dairy sneaking in every week on the show now. That's off about 4.45%, so just slightly beating lumber to the dark side this week. Number 2, we're going out to cocoa. Cocoa's had an interesting year and change out there, having an interesting week, off nearly 8%, 7.9%. And the big dog to the downside again, off about 9.5%. It's our old pal OJ. Again, some of those caveats we mentioned earlier with lithium apply to some of these as well. Not exactly the most liquid, pun intended, especially when you're talking about names like OJ out there. It's been an interesting time out there. Dan, what's catching your eye in everyone's beloved rough rice, lumber, dry whey, cocoa, and OJ, sir?
Well, lumber surprises me a bit because the demand that we have for recovery, even if you look at what's happening rebuilding the damage that we went through last year from fires to storms, the demand for lumber is not going down. And it's a northwest, northeast part of our country where we source a lot of our lumber, and plus our friends in Canada as well. So that one actually does surprise me a bit. The other one that I think is logical out of that list that you mentioned is cocoa. Cocoa's a very interesting market. Uh, Over 50% of cocoa comes from the Ivory Coast and Ghana. And that's a high quality chocolate that comes out of those countries. I've done conducted courses in Ghana, and it's a very interesting country. The cocoa that they produce is unique to Ghana. It's a hybrid that they grow there. So it's interesting too. If you haven't seen cocoa in terms of how it grows, they're pods, but they grow off the trunk of the cocoa bush tree kind of plant and not on the leaves like we think about other things that we harvest. So it is unique and the processing is unique, but we have a lot of cocoa. That's the bottom line. That's why you're seeing that. So they're major producers. The other area you can look at is not only South America with Brazil, but also in Colombia, but Cameroon and Africa. Again, quality of chocolate from those regions, not the same as Ivory Coast and Ghana, but it's a very interesting global market. So it is one to keep in mind as you're looking at commodities. It's very sensitive to changes in weather, to viruses or other issues that can have growing wise in terms of things that may impact its growth. But right now, it's looking good. And it wasn't that long ago, Mark, that they were having some big issues when it came to cocoa. But we're seeing that calming down. So the expectation right now is for weaker prices when it comes to our friend, Mr. Cocoa.
Yeah, cocoa was having a rough year last year out there,
Sure did.
Mr. Dan, and it looks like at least some action unfolding this week. Will be another tumultuous year out here in cocoa. We'll have to stay tuned to find out as we dive on into what's lighting up the tape out there in the futures market today. We're expanding our purview a little bit. We did this last week on the show. It was kind of fun. We're going from a top 10 to a top 15 because we love our top 10 listeners, but it's so heavily dominated by rates and equities. We like to mix it up with some other products as well. Hence, a top 15 cost you almost 150,000 contracts, about $1.42 to break into our top 15 at the start of the show. That gets us to the yen. The yen's been sneaking into our breakdowns of the last few weeks. So kind of interesting stuff. Today it comes in at number 15. It is the March contract. So kind of interesting there, 142,000 contracts. We have a lot of all March in our top 10, with the exception of one. In our top 15, though, we get a little bit wilder with some May sneaking in there and even some April. So a lot of wild stuff. Number 14, Dan was just talking about it. We talked about it last week as well. It's kind of the on again, off again trade. Is it on again? It's soybeans, number 14. 145,000 contracts on the tape today. Number 13, keeping it in the ag. See, we get some ag sneaking in there when we expand to a top 15 listeners. It's corn, the May contract. Again, soybeans was May as well. 204,000 contracts there. Number 12, another area, another marketplace a lot of people are watching very intently right now, especially with what's going on in Iran. A lot of people were looking for some hints, some insight into that in the State of the Union last night. We didn't really get that. Nonetheless, it's number 12 today. It's WTI, the April contract, 268,000 contracts on the tape. In the crude oil space, number 11, we get our first equity offender on the list. It's the Nasdaq E-mini. Again, it's all March for the rest of our list with the exception of one. You can probably guess what it is, listeners. Nasdaq putting up 328,000 contracts. For the number 11 spot, number 10 cost you 385,000 contracts to break into the top 10 today. That gets us to our old pal, 3-month SOFR again. The lone December contract on our countdown today. Number 9, it's the 30-year, 436,000 contracts. Again, the rest of our list all March all the time. Number 8 is the Ultra T-Bond, 555,000 contracts. Number 7, keeping it ultra but going out to the 10-year, 656,000 contracts there. Number 6, it's the old S&P E-mini, 740,000 contracts. Number 5, back to the rates, it's the 2-year note, 852,000 contracts. Number 4, the S&P Micro, 944,000 contracts. Lately, it's been a bit of a dust-up for our top three in the countdown. Usually it's the 10-year that takes it without much of an effort. Sometimes we see the Nasdaq Micro kicking it to the number 2 spot. Last week it came in at number 3. It was kind of wild. Let's see what our top 3 looks like today, listeners. And number 3 is the Nasdaq Micro. So 1.21 million contracts. So all the way down to number 3. That means, what is number 2 and what is number 1 today? Number 2 is the 5-year note. That's been sneaking in to our list a little more of late as well, and certainly coming in higher than it has recently as well. So the 5-year note coming in number 2 today, 1.34 million. That means the big dog, once again, it's the 10-year note, but just slightly managing to edge out the 5-year note, 1.35 million for the 10-year. So those two going back and forth for the top spot on our list today. Dan, it's an embarrassment of riches when we expanded to a top 15. We got a little bit of everything. We've got the FX with the yen. We've got ags with corn and soybeans, which you kind of touched on soybeans a little bit already. We've got crude oil. We haven't really talked about that yet. That's obviously a hot complex for a lot of people. And then a boatload of equities and rates, sir. What is catching your eye in our most actives today, sir?
Well, I guess what triggered my mind when you started to go through the list, the yen I find fascinating, and that was number 15, because of the enthusiasm in Japan. This change in leadership, I really feel, has changed the psyche of the country almost. That's the way it feels. I do have some contact with people there, and just the feeling I get from talking with people or conversing by email with people, I know that there is a change in attitude. So, Mr. Yen getting weaker, coming back off a bit, I wouldn't be surprised to see that, but keep your eye on that market. It's very cheap at the moment. Soybeans is moving because of the expectation of China. China said, hey, we're going to buy a bunch of your soybeans, according to what Trump said they committed to. And they did buy some toward the end of last year. How about that? And they're supposed to be buying 25 million bushels this year. So the outlook is positive. And if there is a change in tariffs on that, that increases that expectation. We're also seeing that in corn. But number 12 that you mentioned, Mark, I find very interesting. And that is our friend, Mr. Crude Oil. It's interesting because let's think about where crude oil is. Is it at these levels because of supply and demand? Is that what we're witnessing? You know, it is a supply demand market. Is that what? No, it's not what's happening. We have plenty of crude oil in the world. And let's take Iran out of the picture. In Trump's first term, Iran was squeezed down to, I think, less than 1 million barrels a day. Over the previous next 4 years, it increased to about where it is now, about 3.5 million barrels is about where it is. That's about 3.5% of global supply. Saudi Arabia, OPEC, they have 5 to 6 million barrels a day of excess capacity. And United States could add to that as well. So is there a tightness if Iran crude oil goes away? Most of that, by the way, goes to China. No, it isn't. Okay. But what about the Strait of Hormuz? You know, Iran saying that's our baby and we can shut that down. That's where everything squeezes together. That's about 20% of global supply go through that area, through the Strait of Hormuz. And that's why that's also a highly sensitive area when it comes to crude oil. Well, so what does this mean from that outlook point of view? And from my point of view, you're seeing a market on anticipation. It's softer today, but we're basically been in a sideways market for the last 4 or 5 days. And the reason behind it is, I think, The market's anticipating something that may happen in that part of the world. So it would respond to the uncertainty of what may happen. It's not a supply demand situation. And that means if we do rally, if we start moving higher, we're around 66, 70, 80 in that range. That means $68 is your next objective. If we're getting up there because there is a change that, the Strait of Hormuz gets shut down, Iran does get knocked out in terms of supply, that uncertainty can drive this market. But I think it's important for you and I to keep in mind that it's not a supply demand situation, it's an anticipation situation, which from my point of view, we want a relatively tight stop because that could come down faster than it did go up. And even right now, if we get below 65.48 in that range, that would be a big adios range. We would look for further weakness in that market. But one more thing, and that is the bigger picture. Crude oil has been in about a $5 range for the last few months, or since the beginning of this year, about beginning of February or so. We've been in the sideways market. So it's this market waiting to go higher, but it's not a supply demand situation. I think it's important to keep that in mind. In nat gas, we're going to stay in energy. That we just got a hell of a lot of nat gas. And the weather conditions, although I feel terrible for our friends out northeast with these nor'easters getting buried in snow, but the outlook actually looks pretty good weather-wise. So we're seeing that downward pressure on nat gas, and that it's cheap right now, but that could continue. So I guess those are a couple thoughts on those
Well
markets.
done, sir. Let's continue with the show into our year-to-date movers out here, listeners. What's lighting it up? Let's go to the green first because let's keep that optimistic spirit flowing, listeners. We're going out to heating oil. Again, not a market we talk about too much, but it has some action of late, up 22.25% so far year-to-date, listeners. Number 4, going out to the land of the beans. This time it's the oil. Soybean oil up 23.5% year to date. Again, a lot of that optimism coming out of China reflected there, like Dan's been talking about. Number 3, you don't need me to break this one down for you. It's silver, up nearly 29% a year to date so far. Number 2, out to my favorite complex, to dairy, this time to non-fat dry milk, up 31.65%. Again, that caveat we talked about earlier about these products being not that liquid, pun intended, when we're talking about milk. We looked up the volume numbers for the milk futures last week and not exactly lighting the world on fire. So again, take some of these percents with a bit of a grain of salt, and that also goes for our top year-to-date mover here. This is lithium, up about 32%. Dan, have you been slinging a lot of dairy since the last time I talked with you, and anything else catching your eye in our year-to-date upside list?
Well, not so much. Dairy has basically been in a typical, I don't know if it's really a seasonal characteristic, but we see attempts at a rally and then it breaks right back down. Another rally, we break back down. It's about a 2-month cycle. And I think of the action that when you see that kind of market, it's what I call consistency of behavior. It's probably hedging. So, you think about if you and I would stop somebody on the street in Chicago, there's probably a low probability they're going to have class 3 milk in their portfolio. So it's really a industry product. If somebody's going to participate, it's that kind of entity that either has a need to buy milk for its processing or to sell it. And I think that's what we're seeing. So it's really, although volatile, as you have pointed out, it's a relatively organized, relatively orderly market that we're seeing, I think, when it comes to that. And soybean oil is also another interesting one that you mentioned. And there's a few factors that comes into play here. It's one that even seems remote to the United States, but it can have an impact. 75% of sunflower oil comes out of the Ukraine, and it's, consumed a lot of the Bulgaria and other countries around Romania, other countries in that area. Well, if they don't get that, then they could look at olive oil. They can look at palm oil, and that's a product that's traded in Kuala Lumpur, and it can also put pressure on soybeans. The other factor that comes into play that you want to keep in mind when you're looking at soybean oil, for example, and other products, it's our use to use soybeans for ethanol. And about a third of our crop goes for that. If you look at our friends in Brazil, they're a major ethanol producer. That's really what drives their auto industry in a sense. So it's one when it comes to consumption. I always think about soybean oil from a global point of view, not just our situation here, because it is truly a global market. And I find it really fascinating. The other one that you mentioned, Mark, is silver. Silver is really, I would say, the unique precious metals. We know about gold and where it fits in, but silver is unique not only because of the precious metal status and that it's a wonderful part of the electronic industry, but it's also one that has a fairly large industrial application. And one of those applications are solar cells. And I can't remember how many ounces or grams are used in a solar cell, but it's huge when you look at the global supply. And again, where do a lot of solar cells come from? Our friends in China, are major producers. So there is this underlying demand that we're seeing for silver. I think that's below the surface that a lot of people may not think about when it comes to that market moving, but it's fascinating. And silver can have that volatility. I know we think about gold, but silver can lead the way when it comes to precious metals. So I think it's one that we want to keep our eye on going forward this year.
A lot to keep an eye on here, Dan. Before I get to our losers for the year, I want to go back to something you touched on a little bit earlier, which is nat gas. It's been an absolutely wild period for nat gas as well. And, it cracks me up, Dan, because when you first start exploring nat gas, it's probably one of the most highly seasonal products out there. And everyone thinks, well, you buy it heading into the cold winter months, and then you sell it going into the warmer weather out there. If you did that trade this year, Dan, you crushed it. And that's usually priced in so you can't make anything on that trade. It's the lowest hanging fruit trade there is in the nat gas market. Yeah, if you came in and loaded up on nat gas futures, Dan, heading into those middle couple of weeks of January that are usually, polar vortex time, the worst time of the year, and then got out of that trade immediately thereafter, you made out like a bandit, Dan. Just absolutely wild how easy it was this year in nat gas.
Well, what's interesting about that too, Mark, I'm glad you brought that up because let's think about consumption. And let's think about consumption in the United States. We use about a third of nat gas to heat our homes and to cook our food. We use about a third for industrial applications, steel industry, chemical industry. They consume a lot of nat gas. And we use another third to produce electricity. So nat gas can have, in the summertime when we turn the air conditioners on and that demand increases, you want to remember we produce more and a lot more electricity in the United States with nat gas than we do with any other means, more than coal, for example. China, different story, but for us, that's where we are. And then when we think about nat gas globally, we have the ability, we're the world's largest producer of nat gas. And something we didn't have, Mark, just a few years ago was the ability to really export it on a large scale. And now we do. If you look at the Gulf Coast, we have the ability to now move nat gas, which we have a lot of, to Asia, to China, to Europe, to Spain, to Germany now has the ability to take in nat gas. They got everything from Russia before. They had no outlets for us to give it to them directly. That's changed, and they're part of the European network of pipelines and things that can help them out too. So the Russia-Ukraine war, what fascinates me is that we see a shift in sources and demands globally on the energy front. Countries that weren't dealing with other countries are not dealing with other countries. And we're seeing also transactions in the energy world that are different. In other words, if I'm India, if I'm China, well, we'll see what they do in the future in terms of buying Russian crude oil. But they could pay for it in rupees. They could pay for it in yuan. It's a dollar commodity, and countries want to get away from making those transactions. So our energy really runs deeper in terms of geopolitical issues and also the dollar. The dollar has an impact not only on the cost of that commodity, but the transactions. And a lot of countries do not want to deal with the US dollar, although it is still about 80% of all global transactions. They know that if they touch the dollar, then that transaction can be touched. That's why $300 billion of Russian assets are being held. So they're not thrilled about using it. So even though we're looking at, nat gas, it really has global implications too that I find really fascinating when it comes to that market.
Wild stuff out there in nat gas. Is there wild stuff on our year-to-date losers list? Well, let's find out. Number 5 to the downside for the year, listeners, keeping the trend alive. It's OJ off 10.33%. And again, keeping it in the breakfast beverage category. Number 4, our old pal coffee off 14.5% a year to date. That is definitely welcome news to a lot of our Starbucks aficionados. Coffee has been just skyrocketing over the last year and a half or so. So to see a little bit of a respite is welcome news to those folks out there. Not really welcome news for our number 3 and number 2 offenders on the list. You know where we're going. We're going out to crypto, listeners. Bitcoin, the big and the micro futures off about 21.6% year to date. And if that sounds bad, allow me to present number 2, a good old buddy Ether off nearly 31% year to date. Obviously getting some of that back this week. Bitcoin popping today, ETH popping today. So taking a little bit of that edge off, but still it's been a bit of a blood red year for most of the major crypto assets. And the big dog to the dark side so far this year, once again, we were talking about it at the top of the show. It's cocoa off almost exactly 50% year to date. So just when you thought cocoa had no more to give, Dan, it comes in 2026 and says, here you go, here's another 50%. What's 50% for cocoa bulls who have already been annihilated, Dan? Wow, just wild stuff. A pretty interesting list to the dark side. A lot of beverages, Dan, sneaking in to our dark side so far this year. What's catching your eye, sir?
Well, you're right. There are, and the cocoa situation, could it go lower? Yes. And what I find interesting about cocoa, and I don't know the current terms that they're using. I mentioned before that Ghana and Ivory Coast produce a little over 50% of the world's cocoa. And they have two different systems, the last that I was aware of. And one in Ghana, the government buys the cocoa from the farmer. And the idea is they can make sure they get a good, fair price for that cocoa. In the Ivory Coast, the farmer can deal directly in the global marketplace. So it's a different distribution system. And it's debatable which one is the right one to use. And again, we have it, that is a global supply demand situation. And right now, there's a lot of it. And you mentioned coffee. That's another interesting market. And, it's traded two places. So, and we want to make a distinction between the two. Coffee is traded in London. That coffee is Robusta coffee. The coffee that we trade in the United States, that's Arabica coffee. Arabica coffee is what you would get in like Ely, an Italian brand. That's almost 100%. I think it is 100% Arabica, one of my wife's favorite. Uh, Robusta is a little bitter. So a different flavor profile. Arabica has a tendency to grow on mountains. Like, do you remember the commercial Juan Valdez in Colombia on they show him on the mountains? Well, that would be Arabica coffee.
That's a deep cut, sir. Good old Juan Valdez. I haven't thought about that.
There
in a
you
long
go.
time.
Yeah, see. And if you look at low growing areas, that's typically Robusta. And it's so they're both different products and many blends. Pick up your coffee at home and take a look at the pack, and it may be a blend between Arabica and Robusta, or maybe be all one or the other. So they're two unique types of coffee, and so when you look at coffee, you want to remember there's another offsetting thing going on globally. So, and it truly is a globally traded product, but it's a supply situation when it comes to coffee. Coffee is cheap. This market has really come down in just the last few months. Is it gotten low enough, though, that buyers may start coming in? Well, this is hedging territory. If you and I were a buyer of coffee, there's a company I deal with actually based here in Chicago, and they're an importer of this cocoa and coffee, and so the issue, then they redistribute it. But the issue is, are we cheap enough to start locking in these prices? Has coffee gotten low enough to indicate that buyers may be coming in? Ooh, and what's interesting about this, Mark, just the last few days, this past week, we're seeing evidence that buyers may be coming into that market. And that's what's interesting about coffee right now. So if you're looking at that market, you'd want to see it above 290 by the middle of next week, actually. And ideally, if indeed this is cheap enough, then you should be trading above 300 to 310 within the next 2 weeks. If we don't, look for a sideways move. We may be seeing a bottom being formed here, but it's the behavior over the next 3 to 5 sessions that will give us an idea. Is this cheap, or is it just sellers buying to take profits? So I think coffee from a technical point of view is actually very interesting. So it's one to keep an eye on if you're interested in looking at something a bit different. And then when it comes to Bitcoin, who in the hell knows when it comes to cryptos? Because as much as people try to correlate it with other markets, which I'm not knocking that, that's a logical thing to do. Remember, it wasn't that long ago, Mark, people were saying, well, it's a substitute for gold. If you look at the correlation between those markets, I just don't think that stands up. And so what are the economic drivers? Oh, if there's any economic, it's really perception, right? What causes the value of a crypto? Is there underlying fundamentals like you and I were talking about with supply, demand, and coffee and cocoa and things? No, it's perception. It's a perception market. It's what people think it's worth. And if enough people think it's worth more, it'll go higher. And is it sustainable? What's interesting about Bitcoin, it looks like a market that does want to go higher. But every time it makes an attempt at a rally, we just don't see it being sustainable. And that's true for the other crypto as well. So it is a unique market segment. It has matured. It has got regulator recognition, government recognition in that regard. So we're seeing it evolving. We're seeing evolving product-wise. Now we have ETFs and we have futures. We're beyond just the physical market. So it's fascinating in that regard. So that makes it a legitimate market when you start seeing those kind of products develop, I think. But right now, it's struggling. A market that wants to go higher, but no sustainable buying. And I don't know when that's going to be changing.
I love it. When it comes to Bitcoin, who the hell knows?
Yeah. Well, that's kind of how I feel about it.
That might be one of my favorite statements. I love your big adioses, but who the hell knows might trump them all. Mr. Dan, that was great. That music means we have come to the end of another sojourn through the world of futures. We had wild ups, wild downs, no big adioses, but a who the hell knows thrown in there for you, listeners, and a whole bunch of fun along the way. And Dan, if folks want to have more fun with you when you're not on the show, where should they go? What should they do?
Well, they may want to go over to dangramza.com. I look at 22 markets every day and produce a free daily video. I select a few of those markets to take a look at, and you can go back over 10 years and see previous videos. You'll also see red green lines that change. Those are buy and sell levels. Not making recommendations, but just sharing ideas of references that I find interesting. If you see dashed lines, by the way, it just means that would have been something that happened earlier in the week. And so if you've never looked at futures, one place to start is just watch them. Take a look at them. And you may find that they're not as crazy as you think, that the volatility may not be as unreasonable as the perception is. You can think of a lot of equities that are very volatile too. Anyways, that's a potential resource. There's a course there that talks about the techniques that I use in the trade management, and then also more advanced video. But anyways, dangramza.com is where all that stuff is.
Check them out. Dan Gramza, Gramza.com, the place to go to kick the tires and light the fires. While you're checking things out online, check out our friends over there at tastytrade. They have a lot of good info on futures as well as options for you folks over there if you want to kick the tires on a new broker. To see what they have to offer, tastytrade.com/podcasts to learn more. We'll be back after the closing bell, about 45 minutes, to break down all the action in the options market today on the Hot Options Report. Back again tomorrow with our buddy the Flowmaster on the option block, and then Twifo, who will join us on Twifo. We got to tune in to find out. Back again on Friday, of course, talk some vol on volatility views. Then back for all of our pro friends on Friday with a little bit of options oddities. What weird and wild trades will we get up to? What will be the hymns of this week? I don't know. The MSTU of 2 weeks ago. In fact, I see our chat talking about MSTU again. It's back. What will be the hot thing out there, the wild trades? TheOptionsInsider.com/pro is the place to go to learn more. Then we're back again next week all the way through to next Wednesday. Another episode of the Futures Rundown. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. That's tastytrade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named tastytrade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. tastytrade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.